Did you receive a mail from your HR asking you to submit your investment proof? Then avoid this mistake or you will pay thousands in extra taxes. Welcome to ClearTax, where we simplify finances and taxes for you. Now, before we dive into the mistakes, let me give you a clear distinction between the investment declaration and investment proof. See, investment declaration is just an estimate of the investments and expenses you plan to make, such as PPF, tax-saving FDs, tax-saving mutual funds, donations to certain institutions, etc. Your company will usually ask for an investment declaration at the start of a financial year, and this is done to ensure you don't end up paying extra taxes. Now, let's talk about investment proof. So, investment proof is the actual evidence of the investments and expenses you declared before. So, your employer will usually ask for investment proof in the month of December to Feb. Based upon the proof submitted, your company will adjust the TDS for the remaining months of the year. In case your proof doesn't match your declaration, your company will deduct higher taxes. So, make sure to always submit your proof correctly. Now that we have understood the difference between investment declaration and investment proof, here are 3 common mistakes that you should avoid to make sure you don't end up paying extra taxes. Mistake number 1 is not declaring income from other sources. Many of you might be earning from income sources like rental or interest from FDs, etc. But the problem is, if you don't declare this to your employer, they will deduct taxes only on your salary and not on the other income sources. Confused? Let me explain you with a simple example. Let's assume your annual salary is 12 lakh rupees. If you have an additional income of 5 lakhs from rental income and you fall under the 20% tax slab, your tax liability on this amount will be 1 lakh. Since your employer doesn't know about this additional 5 lakh rupees, they won't deduct taxes on it. This means you pay less advance tax that you are required to. In this scenario, and penalty interest of 1% per month will apply to this unpaid 1 lakh rupees. This is why it's crucial to pay advance taxes on time to avoid unnecessary penalties. If you want to know more about Section 234B and 234C and also know how to calculate the interest amount, you can check out our blog. The link is in the description. Mistake number 2 is doing wrong investment declaration. Many people do wrong investment declaration at the start of a financial year, but they fail to provide their proofs at the end of the financial year. For example, if you declared rupees 1.5 lakhs for investment in tax-saving mutual funds or ELSs, but you invested only 50,000 rupees, your employer will deduct extra taxes once the mismatch is identified at the end of a financial year. Now, if you don't invest the remaining 1 lakh as planned, you will miss out on 20,000 in tax saving, assuming you are in 20% tax slab. This means your employer will deduct extra taxes, leaving you with a lower salary in Jan, Feb and March. Mistake number 3 is not declaring income from your previous job. So while switching jobs, most employees forget to report the income from their previous employer to their current employer. Now because of this, your current employer will deduct taxes only on your current income and not on your previous income. So at the time of filing ITR, not just will you have to pay additional taxes, but also you will have to pay 1% interest per month on the additional tax unpaid amount. For example, if you switch to a new job in September 2024 and you earn 4 lakh rupees income from your last employer in the period of April to August, and you earn 12 lakh rupees from your current employer in the period of September to March, in this scenario, since you didn't disclose the 4 lakh rupees from your old company, your new employer calculated the TDS only on 12 lakh rupees. This means taxes on the 4 lakh rupees remains unpaid, and you will owe extra taxes plus a 1% monthly interest penalty while filing the ITR. To avoid this, always make sure you declare your income from your previous employer to your current employer. For convenience, you can try ClearTax tax calculator to calculate your overall tax liability. And to save more taxes, you can use ClearTax tax planning tool and plan your investments wisely. The link for both the tools is in the description. So, if you found this video helpful, make sure to like this video and subscribe to our channel for more such informative videos. Thank you.